Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1463 and today's date is January 4th, 2018, and the title of the episode is The Economy is Deteriorating, and it's Spreading Quickly. Let's get into the economic collapse financial news. Now, yesterday we mentioned that Macy's was closing 30 stores in total, and they already started to announce some of their stores. They said right off the bat, they're closing 7, then they're going to be looking at another 4, and then another 19 after that. And we can see at this point, they're closing many stores. And this is not because sales are fantastic. This is because sales are plummeting. Even though the corporate media is out there trying to tell us that sales have been pretty good, same-store sales are fantastic. If sales are doing well and they're improving and everything is getting better, you don't contract, you expand. And right now, when they close these stores, there's closing the store in Miami, they're closing the store in Gainesville, Florida, they're closing one in California, they're closing another one in Indiana, Michigan, Vermont, Cincinnati, and a lot of people are going to be losing their job. About 5,000 people will be losing their jobs, and it already looks like they're getting ready to close even more stores in Los Angeles, San Francisco, Idaho, and many others. And they're looking at even more than that. We see Sears is closing 103 stores. This is on top of the 63 stores closing at the end of this month. And Kmart is also closing stores. We're going to see a lot of retailers come out, and they're going to be making announcements that they're bankrupt, they are closing stores, and we're going to see this happen throughout this year. Is it going to be as bad as it was in 2017? Well, we don't know yet because we don't have the actual numbers. We just have what the corporate media has been feeding us, telling us that everything is great. But the proof is in the pudding, because what will happen is stores will come out with their numbers. They'll say profits are down, and all of a sudden we're going to see stores start to close. Because again, we don't have the actual numbers of what the stores have been doing. Now, does this mean every store is doing poorly? No, there'll be some stores that are doing okay, that are holding on, and there'll be other stores that are a complete disaster, because it doesn't hit everyone all at once. It hits a lot at once, but not everyone at the same exact time. And we can see this. Go back to 2008. Not everyone was caught up in the 2008 recession. Some people made out very well. Some people, it was a complete disaster. They lost everything, their business, their house, their cars, their families broke up. Same thing in retail. Some stores went out of business in 2017, shut down for good, never to be seen again. Other stores were hanging on. But what we're seeing right now is a complete and utter breakdown. If we look at auto sales, well, this is a complete and utter disaster. Total new vehicle sales fell in the U.S. by 5.2% year over year in December to 1.6 million units. For all of 2017, sales declined by 320,000 vehicles, or 1.8%. And what we're seeing is that this was the first overall decline since the financial crisis. Now, compared to 2015, sales fell by 249,000 vehicles, or 1.4%. And if we look at some of these manufacturers, we see GM, negative 2.7%, Ford down negative 1.1%, Fiat Chrysler down 8.6%, Toyota down 2.6%, BMW down 12.6%, Mazda down 9.3%. And what we're seeing here is that the automobile industry, it's taking its hit right now. And when we really look at it, what is going on? Well, we have a lot of soaring defaults on subprime auto loans. That means there's a lot of people that just aren't going out buying the cars. The ones that have purchased the cars, guess what? They're defaulting on their loans. They've went all the way to the bottom trying to get subprime people in to take these loans. They got the loans, and now they're defaulting on them. We see ballooning negative equity in trade-ins as a result of years of lengthening loan terms and rolling everything over. And it can't be sustained this way. It just doesn't work. And going into 2018, it's just going to get worse, because there's going to be a lot more people losing their jobs. More retail stores are going to close. More corporations, and remember, these corporations, they haven't been making profit sales. They've been buying back their stocks. They've been taking out cheap money. They've been shutting different locations down to make their earnings look good, which are completely different than revenue and sales. We see the brick and mortar meltdown is now reaching movie theaters. So we have the retail industry with stores, brick and mortar stores. We have restaurants, traffic is declining, sales in restaurants are declining. Automobile industry is declining. Now it's hitting movie theaters. And when you look at this, you say, well, wait a minute. How could it be movie theaters? I mean, The Last Jedi just came out and it made $517 million. Well, if we go back in time, we see the Star Wars movie, The Force Has Awakened, that made $900-something million. Now, yes, The Last Jedi has longer to go, but at the same time period, the other movie made a lot more money. And if we look at this, we can see that ticket sales are going down. Less people are going to the theaters. Prices of tickets are moving up. And yes, this could kick a lot of people out saying, you know what, I'm not going to pay that high price. And what we're seeing right now is that it's starting to hit the entertainment industry. The number of actual tickets sold in the U.S. movie theaters in 2017 fell by 3.6% year over year. Now, this is according to the numbers. This is a site that calculates all this and collects all the data. And what we're looking at right now is that the peak ticket sales, they are down 21% since 2002. This tells us that we've been seeing a decline since that period of time, and it's accelerating. And as the price of tickets move up, less people can afford it. As the price of food out in restaurants moves up, less people can afford it. As people lose their jobs, people don't go out to the movies. People don't go out to dinner. And this is exactly what we're seeing right now. Now, movie theaters have been trying to combat this by redoing their theaters. They're putting in recliner chairs, wider chairs, making it feel like you're watching the movie in your living room. But it doesn't seem to work right now. It looks like a lot of people are saying, you know what, I'm opting out right now. I'm not going to be going to the theaters. And what's even more interesting is that the major production houses like Warner Brothers, Walt Disney, Paramount Pictures, Sony Pictures, and Universal, they noticed this, and there's been a downward trend since the recession where they're releasing less and less movies. In 2017, they released just 79 movies, down 38% since 2006. So what we're seeing here is a deterioration in different sectors right now. And it's coming out into the open, showing that there are problems. And we can see right now that this is going to continue. And remember, most of these theaters are near malls or inside of malls. And we know that the traffic in malls have been drying up. And if these theaters, if they start to close down because they're not getting the ticket sales and they can't make a profit, it's going to affect the malls. And it's going to be a domino effect, and it's going to be absolutely terrible. We see the services PMI sinks to 6-month lows as confidence tumbles. We also see the housing markets, not just here in the United States and Canada, but we're also seeing the housing markets, they're beginning to crash in Australia, New Zealand, London. Now, property values, they're all starting to crash. Australia home prices fell in the final 3 months of 2017. We're also seeing it in New Zealand. We're seeing it in London. And what we're seeing right now is that the whole thing is starting to completely fall apart. Now, what's very interesting is that a lot of these homes were purchased by foreign buyers. And that is starting to dry up, especially the Chinese, because they're starting to redirect their investments back into their own country, into the Belt and Road, and away from real estate. And remember, the everyday person is not out there purchasing these homes. They're not going out taking a mortgage, because a lot of these people, they are barely hanging on. Many people can't find a high-paying job. Many people can't find jobs at all. And what we're seeing is that it's completely falling apart. And whenever housing starts to decline, so does consumer spending. And guess what? You get the economic downturn. We've seen this time and time again, and it's happening once again. So the economy is deteriorating. It's spreading to all different sectors. It's spreading to countries, and we're starting to see all of this happen all at once. Now, at the same time that this is happening, we see, and as we know, we discussed this before, the petro-yuan has been tested. They said it was going to go live after Christmas, and it looks like it is slated to go live on January 18th. That's when they expect to start this. And the Shanghai International Energy Exchange, a unit of the Shanghai Futures Exchange, will allow Chinese buyers to lock in oil prices and pay in local currency. Also, foreign traders will be allowed to invest, a first for China's commodities market, because the exchange is registered in Shanghai's free trade zone. And like I said, the trading is going to start January 18th. Why is this important for China? Because futures trading would wrest some control over pricing from the main international benchmarks, which are based on dollars. Denominating oil contracts in yuan would promote the use of China's currency in global trade, one of the country's key long-term goals. And China would benefit from having a benchmark that reflects the grades of oil that are mostly consumed by local refineries and differ from those underpinning Western contracts. How do oil futures work? Well, future contracts fix prices today for delivery at a later date. Consumers use them to protect against higher prices down the line. Speculators use them to bet on where prices are headed. In 2017, oil futures contracts in New York and London outstripped physical trading by a factor of 23. Crude oil is among the most actively traded commodities, with two benchmarks: West Texas Intermediate, or WTI, which trades on the New York Mercantile Exchange, and Brent Crude, which trades on ICE Futures Europe in London. Why didn't China begin trading futures until now? Well, lower crude prices have played a part. Chinese oil futures, well, they were proposed in 2012, following spikes above $100 a barrel, but prices in 2017 have averaged a little more than $50 a barrel. There's also concern over volatility. China introduced domestic crude futures in 1993, only to stop a year later because of volatility. And it looks like they worked out all the problems, and this has been in the works for some time. Could the yuan challenge the dollar's dominance in oil? Yes, it could, but it could take a couple of years, since most of the world right now trades oil using the dollars. But it would happen slowly. And this is what the central bankers like. They like things to happen slowly so you don't notice it. And remember, China is creating the Belt and Road. So on the other hand, paying in yuan for oil could become part of the One Belt, One Road initiative. And this would develop ties across Eurasia, Middle East. It would allow the Chinese to participate in Saudi's Aramco's planned initial public offerings. It could help the Saudi opinion toward accepting the yuan. So we can see that this is going to go up against the petrodollar. What's certain is that the BRICS supported the petro-yuan move at their summit in Xiamen. And we see that many other countries like Russia, Venezuela, and many others are considering using the petro-yuan. So we can see that with the economy completely falling apart, with countries moving away from the petrodollar, and it's not going to happen like tomorrow, but it's going to happen slowly, with the One Belt, One Road initiative, tying all these different areas together, having the petro-yuan, having the futures market, we can see how this is being set up, and it's going to be used to move everything away from the West. Now remember, everything that they've been doing has been done over time. It's not like yesterday they flipped a switch and everything just moved. Everything has been planned for quite a while. The central bankers, they do this very methodically. They take their time. They make sure that no one really notices it. And the corporate media, they're not looking at this at all. And what we're seeing right now is they're getting ready and prepared to make the switch over to the new system. What they really wanted was some type of distraction to distract the world for another couple of years. So this way they can switch everything, and when everything comes back and the distraction is over, like war or whatever, they can say, listen, we need to go to a different system. We need to go someplace where there's manufacturing, where there's gold, where the system can be maintained and sustained, and we need to get away from the other system. That's what they really wanted to do. But at this point right now, they've been planning, they've been prepping, and we're getting very close to that stage. And when we go through this transition period, well, it's going to take everything that we know here in the United States and out in the Western world, and it's going to completely change the way we do everything here. And this is why you need to be ready. This is why you need to be prepared. This is why you need to protect your wealth. This is why you need to be ready for the transition. And this is why all along we've been telling everyone, get ready, get prepared, because it's coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.